Hello, welcome back to my online video banking tutorial. Today's topic is basically personal finance in a nutshell. How you can use the bank's tools to help you organize your money without causing you a lot of stress. The typical person's idea of budgeting is they have a blob of money in their checking account. Or if they're really on top of their game, they have a blob of money in their checking account and they have a blob of money in a savings account. They think they're smart. Well, I personally think you can do a lot better than that. And here's how. The free checking account. Your bank does have a free checking account, right? You're not paying any monthly service charges, are you? I hope not. Yeah. Why do people have just one checking account? I always wondered that. I don't know. I think they just never really realized that they could have more than one. But there's certainly no law against it. There's no reason you can't have 5 or 10 checking accounts. I mean, what the heck? They're all free. And if it can help you to organize, it's going to be worth it. At first, yeah, you might think that's going to make it more complicated, having 10 checking accounts. But if you do it the right way, it can actually work in your favor. Let me show you how. Suppose you have a specific purpose that you want to account for. If you did a written budget every month, like you're supposed to, I mean, that's the cornerstone of a financial plan, having a written budget. That's just a lot of work. Nobody's going to actually stick to it, right? You might try it for a month or kind of write some kind of general budget that's going to probably change the next month, but you're not going to update it and whatever. For most people, they just don't have the motivation to really keep up with it. But with a free checking account, you can just open up a separate account for maybe medical expenses, maybe your taxes. You want to set aside your taxes. You want to save money towards Christmas. You want to save money towards a vacation. You want to organize all the income and expenses for a rental property. You can take all those and you can open up separate accounts for them. A separate free checking account. It's not going to cost anything. No minimum balance. And if you want, you can get separate checks for each one. You can have a separate check card for each one. And you can put what's called a subtitle on the account. Instead of just having your name, John Jones, you can have John Jones Christmas Fund. And that way, when you get your statement, it's going to say John Jones Christmas Fund. And the only thing that you're going to see on that statement is going to be all the money that you saved that month towards Christmas. And then come November and December, you start shopping. The only thing you're going to see on that account is Christmas-related expenses and stuff you put towards gifts. So it's going to basically do all your budgeting for you. You don't have to sit down and write the budget every month. It's too much work. And for something like a rental property, or medical expenses where it's got tax deductions, if you could have all that listed out in one statement, and you give that to your accountant. Here are my expenses and income associated with my rental property. Your accountant will want to kiss you on the lips because you're not going to miss any deductions. You're going to wind up saving yourself money. Just with a little bit of organization. Put the subtitles on the accounts. You can go in the online banking. You can give nicknames to the accounts on online banking. So instead of saying I'm going to transfer money from the account ending 4862 to the account ending 3914, all you got to do is transfer. I got to buy that new rental property. Got to buy that new water heater for the rental property. You just transfer money from your primary checking account or from your savings or whatever into your rental property account. A lot of people have trouble saving money, though. I mean, that could help you organize it, but what about saving? You want to kind of build up a little bit of a nest egg. The best way to do that is splitting your direct deposit. If your employer offers it, definitely take advantage of it. If a typical paycheck is $800, put $700 into your checking account. Put $100 into savings, just set it aside. You'll never see it in your checking account. You won't be tempted to spend it. It works like a charm. It works really good. If that's not an option for you, you can always set up an automatic transfer too. So instead of splitting it, it just gets automatically transferred every 2 weeks into your savings. So that works too. Another tool that the bank has for you is something called a certificate of deposit. For those of you who don't know, a certificate of deposit is basically a contract with the bank that you're going to put some money in an account and you're not going to put any more money in and you're not going to take any money out. It's just going to sit there for a certain period of time, say a year. And in exchange for that promise that you're giving the bank's going to give you a much higher interest rate. Maybe they're not paying any interest on your checking account. So say you put $1,000 into a certificate of deposit for 1 year. You can't touch that money for a year because you promised the bank you wouldn't. But in exchange for that, the bank's going to give you, maybe the bank will pay 5% on a 12-month CD. So at the end of the year, you made $50 for doing nothing, for just having the money sitting there, and then in this special agreement you have with the bank. And putting money into a CD really accomplishes two things. Because personal finance is, well, math is important. A good interest rate is important. But it's not nearly as important as your personal behavior. And if the money's in a CD, can you take it out of the CD? Yeah, well, technically, if you have an emergency, you can take it out. But you're going to pay a little bit of a penalty. You're going to give up some of that interest that you earned. And you're going to lose out a little bit. So people don't want to pay that penalty. It's going to control their behavior. They're not going to take the money out of their CD unless they really, really have to. So it's working for you in both ways. You're getting a good rate, plus it's controlling that urge to spend it. Other things you can do are just kind of look at where you're having problems. If you find that your inclination is to always, you put the money into your savings, but you always go on the internet and transfer it into your checking anyway, maybe you want to disable that feature. You can do that. The bank can turn off your online transfers or telephone transfers. You can disable that, and that way, if you actually need the money, you can still get it if you go into a branch, but it makes it much more inconvenient. And that's really what you want to do. You want to make stuff inconvenient if it's not part of your long-term plan. And that's really the best way to organize your money and to kind of build wealth without really putting yourself through a lot of aggravation of following a budget really closely every month. Just set it up once, figure out what your important big expenses are. Definitely a holiday fund because everybody's going through that. Maybe a vacation fund. Use your imagination, whatever is important to you. And in the long run, you're going to be a lot better off.